Hi, welcome to the session of Goods and Service Tax, that is GST, and today we are dealing with Basics of Taxation. I am here, Professor Punit, Head of the Department of Commerce and Assistant Professor of Commerce and Management, International Institute of Business Studies. When you hear the word tax, what is the first thing which comes to your mind? Especially students like us and you people, when you hear the word taxes, usually in your mind it comes like somewhere in the media or somewhere in the newspaper you have heard regarding the income tax, sales tax, service tax, and now goods and service tax. These are all the things which it comes to your mind, and usually some people, when it goes beyond that, tax is something which you pay to the government. These are the major things which comes to your mind when we just hear the word about taxes. Then what is the exact meaning of tax? Let us see that. On the screen in the picture you could see that a man is going and paying something where there is a board of tax, and below there is a road, electricity, hospital, dam, so many things. Yes, exactly, you're right. That what the tax, the word is related to. A tax is a mandatory fee or it is a financial charge which is levied by the any government to an individual or an organization in order to collect the revenues from the public, because they are providing the best facilities and infrastructure for the public. So it is one of the sources of revenue which they collect from the public, okay, and they're written in the form of providing a good facility or infrastructure which helps the public, like hospitals or like a road or a dams, all these things which are being provided by the revenue collected as the name of tax. Now let us see what are the different types of taxes we have. There are majorly two types of taxes. One is a direct tax and the second one is indirect tax. First one, a direct tax. A direct tax, as the name itself says, it is a tax which you give directly from your own pocket. Like it is a tax which is levied on individual or taxpayers based on their income, wealth, or the profit gains. Okay, and it is a tax that the person or organization pays directly to the entity that they impose it. An individual taxpayer is like, for example, he pays the tax to the government for the various purposes, like an income tax or like an property tax, personal property tax. Okay, so all these things he pays directly to the government based upon his earning or income or a wealth or a profit. That is called as direct tax. And the next one is indirect tax. Indirect tax is nothing but it is a taxes imposed on manufacturers or service providers who may finally pass it on to the consumers, like a goods and service tax. In detail, indirect tax is a tax that is levied upon goods and services which they produce, and it is a tax levied before which reaches to the customer, but ultimately the customer will pay the tax indirectly as a part of market price of the goods and services purchased. If you purchase any goods and services, you could see that in the label or a price column that is an inclusion of tax, which is nothing but an indirect tax where you will pay, but it is charged or levied before or at the time of manufacturing or producing, where ultimately the consumer will pay the tax, okay, indirectly to the goods and services. We call it as a goods and service tax. Now let us see the difference between direct tax and indirect tax. The first difference is meaning. You already know about the meaning of direct tax and indirect tax. Direct tax is nothing but which is directly paid by the customers, and indirect tax is also paid by the customers but is indirectly to the government. The second point, incidence and impact. In the direct tax, the incidence and impact both will be imposed on a single person. Means the person whose wealth is more, he will only pay the tax. But in case of indirect tax, it falls on different persons. Like the tax is imposed on sellers, but it is collected from the buyers. When you buy any goods, you will pay the amount inclusion of taxation, which has been shown in the earlier slide. And third point, burden. Here in a direct tax, if more income, the burden is more, but in indirect tax the burden is being distributed based on the less price. Okay, and evasion. And in direct tax the tax evasion is possible, but in indirect tax the tax evasion is more difficult. And next point, inflation. Direct tax helps in reducing the inflation, but in case of indirect tax, it contributes to the inflation. Shiftability, but in direct tax you cannot shift the tax payment to any others, but in indirect tax it can shift to any others, like the seller is shifting his payment of tax to the customers. Examples of direct tax: income tax, wealth tax, capital gains, and security transaction. And examples of indirect tax: the general, that is a goods and service tax, and also an excise duty. So these are the major difference between direct taxes and indirect taxes. Now let us see a brief history of indirect tax. So indirect tax was at India when there is the British rule itself. The British left India in 1947 and they left a tax structure at India itself. That is, they have left with the tax structure known as excise duty, which is mainly imposed on the goods which are manufactured in India. So from that time till now, the tax structure is being followed in India. In the screen you can observe with the picture, there are the different tax regime which are followed in India. The first one is custom duty, which is called as a Custom Act of 1962, which is mainly imposed on import and export of goods, and the tax was been collected by the central government. And the second one is central excise duty, which has been and comes under Central Excise Act of 1944, and it is mainly imposed on manufacturing and production of goods, and this tax was also collected by the central government. And third one is the central sales tax. So it comes under central sales tax of 1956 when there is a interstate transfer of goods. So this tax been imposed and it is collected by state government. And the next one is service tax, which comes under Finance Act of 1994, which has been taxable on the services, and this tax will be collected by also the central government. And the last one is VAT, that is a value added tax. We have comes under State VAT Act, so which is sales within the state, and this tax is also been collected by the state government. So this was the pre-GST era and different tax system or a history of tax system which is followed in India. That is an history of indirect tax system at India. Now let us see the structure of Indian taxation system. Before implementation of GST, there was a two types of tax. You all know the direct and indirect tax. And under direct tax, we get income tax, corporate tax, security transaction tax, wealth tax, and capital gain tax. And under indirect tax, we used to get excise duty, custom duty, central sales tax, service tax, and value added tax. And this was a tax system before implementation or before a GST been implemented to the country. And after GST came into force, this was a new GST taxation system. So we used to have a direct tax and as well as indirect tax. And in indirect tax, all other tax which were there before are brought together and they formed as GST, that is goods and service tax, which is divided into two types. One is intrastate and one is interstate. Under intrastate, we had a CGST, that is a central goods and service tax, SGST, that is a state goods and service tax. Under interstate, we had a integrated goods and service tax. So this was the new taxation system, and we will learn in brief what does this mean in CGST, SGST and IGST in the next episode. Thank you all. Hope you have understood all the concepts under basics of taxation. If you have any unclarified doubts, you can put across under comment section, where I am very happy to answer all your doubts and clarify and clear it. And please don't forget to like and subscribe to my channel Edu Skills. Have a nice day.